Hello and welcome to this week's Money 2020 Hindsight, the least you need to know in fintech today. I'm Nick Holland, Global Head of Research at Money 2020, and today we're going to talk about the metaverse, and talk about Adam Neumann again, eBay's big bet on collectibles, and of course the money shot. Pew pew. But first, as we always do, over to Mickey for number of the day. So Mickey, what's our number of the day, please?
Hey Nick, so the number of the day for today is 2.7.
All right, and what's all that about?
So that is the latest version of the web that is being suggested, this time by Randy Zuckerberg. Zuckerberg was speaking at the annual Global Supertrends conference, and she really didn't mince her words when talking about Web3, labeling it an ideal utopia that in reality is in chaos.
Yeah, brother didn't like that very much, to be honest. I mean,
I don't think, it sounded like very much like a pointed attack on her and an attack on him, sorry. And actually, she said quite a bit more. She said, in order to unlock the potential of Web3, we're going to need to figure out a system where there's interoperability. As well as that, though, she said, you need to make sure that there is the kind of protection for consumers that enables them to, be able to use these assets safely and not lose them. And one of the things she suggested is at the moment, we won't be able to see that because the companies who are building Web3 are too concerned with centralization and they do not want to give it away.
I think that's fair. I mean, there's a bunch of them out there, right? And they don't seem to want to play nice. I can't take my virtual pair of shoes from Decentraland to whatever this Zuckerberg hellfest looks like. So it's valid point, I guess. But what was this about Web 2.7 specifically?
Yeah, so this is the thing that where it gets a little bit weird, right? Because I guess just by my account, we've got Web 2 now, but then we've got Web 2.5, we've got Web 2.7. Jack Dorsey's left the 2s and 3s on Web 5.0. I'm not sure why she's gone for 2.7, maybe 2.5 made sense as a halfway. But I guess in essence, what she is trying, I'm not sure what the point two adds to the decentralization.
Again, it is like one more razor blade, or this one goes up to 11, right? It's a little bit. Can we just pick what's it going to be? I mean, I think Web 3 is clearly a little bit utopian in some ways, which is why we have these 2.5 and 2.7s. But it's again, I think more obfuscation of. Well, let's face it this way. I think if we focus on details enough, we might forget the bigger picture at a macro level that the whole metaverse seems kind of nonsense.
Yeah, I think that's really the crucial point, right? And I think what's so interesting is, when we label things Web 1, Web 2, that happened after the fact, right? After these things happened. We weren't talking when the internet was first booming, this is Web 1, right? Now there is such a concern to define what Web 3 is instead of, the actual substantive and material work around it. And as you said, why focus on the details so that you don't have to think about the big picture.
So one of the things she also says is it needs user friendliness, and she added should not take 45 steps to set up a cryptocurrency wallet, buy a currency and enter the metaverse. It needs to be one-stop beginner friendly. I mean, I don't disagree with that either, although, I mean, obviously I don't really go to the metaverse, but if I did, I'd want it to be easy to get there and get out again, I guess, probably.
I
think picture there of Zuckerberg's recent view of what the metaverse should look like. It's a very sort of flat-looking mark there next to, it looks like, well, it's obviously the Eiffel Tower and Sacré-Cœur. That looks just like Paris.
Yes, I mean, very much so. I think for Mr. Zuck right there, I think his sister used to be an early employee at Meta. He brought her in when they were kind of struggling to scale. And I think he might be wise to actually maybe bring her in because I think apart from the 2.7 bit, everything else she said seemed to be spot on.
Yeah. Moving swiftly on, Neumann, he's back, right? So, not that Neumann, this guy. The long-haired, floppy-haired merch purveyor of WeWork formerly, and I guess the recipient of a fairly large funding round from Andreessen Horowitz recently. There's some more news about him. Let's go and have a look at that for a second. So Yes, Mr. Newman here, Mr. WeWork, proving to be Mr. As you put, Mickey, more sane man than Newman. So he got obviously the 350 million from his latest venture last week about WeWorkifying real estate. There's now, though, this report out from Forbes on Flow intending to launch a digital wallet that can store crypto, in addition to the real estate management. And then it gets a bit weird. So, Mickey, do you want to get or dive into the weirdness and sort of explain that for us? So, he's been trying to hold higher roles at a groundbreaking venture that will be one of the largest implementations of blockchain in the economy, involving a multifaceted approach that will be spearheaded by Adam Newman, ex-CEO from WeWork and Netflix movie star.
Exactly. Yeah. I mean, it's a strange story that's unfolding, but it should be no surprise. So essentially, this story is that they've been hiring for a role, as you said, for this groundbreaking blockchain business. But then once the role was out and they were questioned on it, they've actually withdrawn that role and they put out a new role essentially that has nothing to do with blockchain technology and cryptocurrencies. So it's quite strange, first of all. And what just makes it even more strange is that they're going to be accepting US dollars for collecting rental payments from
Right.
Flow's users, but they won't let them pay with crypto. So, you've got to ask, as one a Twitter commentator put it really well, saying, we'll build a digital wallet that you can use anywhere, but don't trust it enough for you to use it for paying your rent to us.
Dubious.
So
Again, I mean, I think some maybe basic rules in fintech. Don't trust people who have merch sites is maybe one warning sign. I think also kind of floppy haired sort of creators in the fintech space of a white male variety, maybe not to be trusted quite so much. Anyway, it's all a little bit unsavory. I guess we will follow the ongoing saga of Newman and
yeah, I think before one thing I would say too, though, Nick, that's really weird about this, right? Is a few weeks ago or a couple of months ago now, at the end of May, Newman secured $70 million for this is before we heard of Flow, the real estate startup. He secured $70 million, again sponsored largely by A16Z, his
yeah.
redeemers, it seems, for a blockchain-based carbon trading startup called Flow Carbon. Now, since the latest announcement for Flow, the rental company, we've had very little details about Flow Carbon. So there is weird stuff going on.
I do hear you. I mean, my Scooby-Doo senses are kind of tingling here in terms of, this looks like something that it is a little bit odd, to say the least. But I think, I mean, back to, I guess, last week's discussion, but another bigger topic as well, really. Why is he getting all this money is, I think, something for us to unpack. So, that's something we'll focus on in next week's discussion as well as this week's poll. So, we'll be focusing on inclusion and diversity with our very own Alma Solera, doing an interview with her. But I think, again, why are so many white men with long hair getting bags of money? So we'll do a poll on that on LinkedIn. So check that out.
Yeah.
All right, let's move on to our final story before the money shot. eBay continues to bet big on collectibles. So again, I think this is kind of interesting. Another, as I say, like acquisition story here. Tell me about this one, Mickey. So eBay's obviously big into the collectible space in the first place, but this is a big transaction that went through, right?
Yeah, so eBay has struck a deal, $295 million for TCG Player, which is an online marketplace for collectible trading card games. And yeah, it's a pretty big, first of all, pretty large sum to put into this space. And really what that reflects is, I think, eBay's kind of concerted effort to move into the collectible space. Given in recent years, especially with the emergence of various e-commerce platforms, especially the likes of, Facebook Marketplace, right? The ones that really target the kind of eBay model, the P2P model. This seems to be offering a real opportunity for growth for the company. And they said in the first year of 2021, um, they actually saw $2 billion worth of transactions for its own trading cards marketplace category, which is equal to all of the transaction that happened in 2020. So rapidly growing. And yeah, they've already also we've covered they've already acquired a few NFT and NFT players. One was a UK based one called Known Origin, and the other one and then they also launched their own one with One-Off, a partnership with One-Off.
It's a huge, I mean, a huge powerhouse. And again, you know, with obviously NFTs were a massive area of focus last year. It seems to have gone off the boil a little bit this year, obviously with the crypto downturn. But I think this sort of overlap of collectibles with NFTs is probably a ripe area for opportunity. So it's a probably fairly sensible acquisition, I think, in terms of eBay, which is kind of quite often the location for collectibles in the first place.
Yeah, I think this one I think makes a lot of sense, and I think also part of it is that having the physical trading cards can definitely support a longer term play within with that NFT side.
Yeah.
So I think that could be a good move, it seems.
All right. Well, brilliant. Well, that's a roundup of the news. So with that, let's move over to our final segment, which is, as ever, the money shot. Pew pew. Our special guest. We did a poll last week based on obviously the results of last week's Hindsight video and the fact that, you know, obviously Brazil's head of payments thinks that they're on the way out. But you don't. You think that 66% of you think that cards are cool, 34% cash is king. We're going to see the demise of cash before cards, according to the survey. One of our long-time viewers, first-time callers, is actually on the call this time. With that, Julie, let's welcome you to the fold, and please elaborate on your comments in our poll.
Yeah, so, you know, there's a lot of controversy about which is going to go first, cash or cards. I really think both are definitely on the outs. When I look at the younger generation, my kids who are ages 16 and 18, I have to force them to carry cash. When they go out to restaurants with friends, usually one person pays, usually with Apple Pay, and then they all Venmo each other to split the bill. And they don't see a need for cash. And I've even been in stores lately where there's signs that say we don't accept cash anymore. So it's really declining very quickly in the younger generation. And then on the flip side, with the cards, people really like open banking. It is an easier way to manage your budget. In an economic downturn, people tend to use debit type transactions or credit instead of credit transactions, managing their cash a little closer. And so that may just be the accelerator that we need to see that decline happen.
Yeah. I had a pandemic experience. I was distinctly remember, which was one of the first times I used cash, and I was buying a hot dog from a street vendor wearing a mask and everything. And I actually felt the cash felt dirty for the first time. I was like holding this sort of limp note. I was like, who's touched this before me? I think there is a bit of a hangover from the pandemic in terms of the sort of the hygiene standpoint. But again, I really have actually, I mean, the pandemic's done one other thing, which has really accelerated my usage of contactless. I mean, I've been a believer for quite some time, but I use it a lot more now. I think the muscle memory is there. And I think probably for a lot of the population, it's there as well. I mean, you're starting to look for QR codes, or they've been educated to look for QR codes or to look for contactless terminals, and, you know, Apple Pay and so on has come on quite a long way in terms of the UX. So I really do think there's going to be, you know, from my standpoint, there's scope for cards, you know, in terms of the actual plastic form factor going away sooner rather than cash does. Thoughts on that, Julie?
The challenge is that the contactless payment still doesn't work 100% of the time. Even where it's really reliable in Europe, there are times where your card, the chip stopped working, or the system is down and you still need to be able to get through. And Swipe just seems to be a little bit more reliable and then an Apple Pay or a card, and cash certainly always will work as long as they accept it. But that, I think the reliability as people move around is going to be really important. And I actually remember a couple of years ago when all the ATMs went down in London, and the credit card network went down as well. If you remember, cash was a rare commodity and people started to panic, and it was only down for a couple hours.
It's a terrifying prospect when things like that happen. It's really, you know, I think what's the rule? You're only three square meals away from anarchy or something like that. It's kind of the adage, but yeah, that sort of, if ATMs go down, it is a real, you know, losing an appendage type feeling. Mickey, over to you. I mean, what are your thoughts on this?
Yeah, I mean, it's such an interesting debate. One, I'm sorry to say, but I have to disagree with our respondents. 100% credit cards will go out first, no doubt in my mind. Two, I'll also have to disagree with Julie. I'm so sorry. 100%, no way cash will ever go, in my opinion. And you know, the reason is because, one, I think the older a technology is, the harder it's to replace. It's really difficult to replace really old technologies. Pen and paper is the oldest technology we have in terms of how we communicate. We still use that. We have different tablets, different devices, but we still go back to those things. Likewise, with cash, it's very difficult to kind of match all of the kind of benefits cash has, especially when it comes to situations of emergency, or even just low types of, I guess, kind of fragility that exists with technology, right? I think the point you made about the ATM was, so I remember being in London at that point, but even in my personal life, I have situations, for example, I'll go to the shop and accidentally my phone is in my pocket. I might have touched a couple of things. It locks, my iPhone is locked, so I cannot pay for this item, right? Or if you know, if my phone battery dies, if I've gone out for a few drinks with my mates, it's midnight, my phone is dead. What am I gonna do? So like credit cards could be helpful in that sense, right? Because when your phone is dead, you could use your card. Now, when we start replacing credit cards, we'll still need something that we cling on to at times of emergency, etc. But and then, you know, on the other major point is about the inclusivity of it. London is, you know, really kind of really ahead of the game when it comes to a lot of other cities with cashlessness, but it's really unequitable because there's a lot of people who end up not being able to partake in some economic activity because they're not able to pay for their coffee with their card, you know, things like that. So I think cash is the most democratic way of payment we'll have, and we'll always have it in mind.
I think it's actually worth remembering as well that, you know, there's a, not only the batteries run out, but there's a certain swath of the population. I mean, you might well have a phone that has contactless capabilities, and the point of sale might well have contactless capabilities, but if the merchant doesn't know that, and particularly again, you know, if my mum doesn't know that, it's going to be very hard for her to wed, you know, herself onto something that's a completely new way of transacting. You know, I think there's an educational requirement here in terms of getting people up to speed with contactless, that's been, you know, I think been left out by the industry. But I think also, there needs to be a much better job on the UX from the handset standpoint, things like that. So it's just a lot easier to use them. But yeah, you're absolutely right. I mean, again, phones batteries run out and then it just becomes a brick, right? And I appreciate your, you know, it's the late night Uber situation where you can't get an Uber because your phone's dead, but also, yeah, you can't buy anything either. You're like, so, you know, there's that reliance on cash in your pockets, or, you know, back to a physical card as that fallback mechanism. Julie, but again, you know, what do you think there?
Well, I was just going to respond to Mickey's comment. One of the things, as I've been debating this over the last couple of weeks, people reminded me that there is a nefarious element out there who actually want to do transactions that are completely untraceable. And that is a very strong argument, like while cash will always exist, unfortunately.
I think, and that actually is spot on. I mean, even when we start talking we could go off on a huge tangent here, start talking about CBDCs, but there's never going to be, I think the CDACs are still going to be pretty prevalent as well, your central bank analog currencies. So, I mean, it's, you know, I think to Mickey's point, that sort of black swan angle of, you know, something that's that entrenched as cash is like your pen and paper. It's something that's just going to be around indefinitely. Whereas the plastic is really just, like I say, it's a form factor that could be transposed onto another form factor once we work out some of the teething trouble. Julie, I want to ask as well, I mean, where do you think, I mean, the future of the card networks is here as well? I mean, again, I mean, clearly they're still very much in the mix for the foreseeable future when it comes to actual payment transactions. But in some ways, this, you know, I guess decoupling from physical cards is a huge opportunity for them. You know, I've already seen it with a lot of companies entering the identity space from the card network standpoint, because if they can, take care of payment credentials, certainly they can take care of identity credentials. But I mean, what other areas are you seeing?
Yeah, absolutely. So the card networks, there's an old philosophy with innovation. It's innovate or die. And if you take a look at what Visa and MasterCard are doing right now, as well as the other card networks, they are working on how do we do open banking payments, how do we do real-time payments, and they're providing the infrastructure to support all payments, not just cards. And so I think we will continue to see the card networks or card schemes, but maybe we'll be calling them money networks instead of card networks.
I think it's interesting how MasterCard is starting to really decouple its name from a lot of the branding. I think that's quite telling. Mickey, what about you? Any final comments and thoughts?
Yeah, no, I mean, I think the point about the card networks, I completely agree with. I think they will probably, that will start to change. I'll just take this moment to double down on my point again around what weren't there. And I'll just give you a quick example. With technology, for example, something like floppy disks got replaced by CDs, but then the speed at which CDs got replaced by USBs was quicker. New technologies get replaced really quickly. Old technologies, the older they are, the harder they are to replace. Credit cards are taking a long time to try and replace. Now we're probably going to get to that stage that they are slowly going to get replaced, but cash won't be replaced. It will still have a place in society, I would say. And not just for nefarious purposes, although that's, I think, what a big driver to me.
Brilliant. All right. Well, Julie, thank you for being our guest, our first guest, by the way, on Money 2020 Hindsight. Really appreciate you joining our is the Nikki and Mickey show. But please, we'd love to have you back. Maybe see you in Las Vegas as well. Who knows? Mickey, as ever, thank you so much for being my co-pilot. So again, Julie Ferguson, CEO of the Merchant Risk Council, thanks very much. From Mickey and I, we'll see you next week. Thanks for tuning in. Bye for now.